Welcome to Smith Weekly Discussions, an occasional program for our readers and listeners of Smith Weekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Thomas N. at Cure for Low Prices, Ben H., Jim P., Dean R. at U Belgium Bull, Michael P., and Clarine H. New guest Amir Adnani is on the show today. Amir is President, CEO, and Director of Uranium Energy Corp, a uranium producer and developer with various stage uranium assets in the United States. The company is listed on the New York Stock Exchange under the symbol UEC. Amir, welcome to the show, and thank you for taking the time, sir.
Hi, Andrew. It's a pleasure to connect with you. I've got my coffee in my hand, beverage in hand, ready to go.
Excellent. Well, Amir, you're pretty well known to our audience. But just take a moment to tell us about your background and past experience in the natural resource sector.
Yeah, I would be delighted. I'm an entrepreneur by background, Andrew, and I've been involved with uranium and gold for most of the last 15 years. As you introduced me, my involvement with uranium started 15 years ago as the founder and CEO of Uranium Energy Corp. And that company from the get-go was focused on development of in-situ recovery amenable projects. We went from a business plan in 2005 to production in 2010. It was a very fast and furious execution in a short time span of 5 years. And as we kind of talk about in the uranium world, there was life pre-Fukushima and then there's life post-Fukushima. And so post-Fukushima 2011, we've pivoted and have been much more focused on development and acquisitions. Similarly, and we can talk about uranium energy, I'm sure, throughout the rest of this. I was recently involved, as you know, and you've interviewed recently Scott Melby on your show with the taking public of Uranium Royalty Corp, where I also serve as the chairman of that company. And I think we've got a very cool and exciting business at Uranium Royalty, where Uranium Energy is the largest shareholder. And then really when it comes to the gold side, as the founder and chairman of Gold Mining Inc., I've overseen the development and growth of that company during a prolonged bear market, also in gold, that started in 2012. And that company is listed on the Toronto Stock Exchange with the ticker symbol GOLD. And goldmining.com has really been a mineral bank type of story with the development and acquisition of a very large portfolio. 5 countries, about 12 million ounces of gold and measured and indicated, 13 million ounces of gold and inferred. And recently we've announced the formation of Gold Royalty Corp, where the former CEO of Gold Corp, David Garofalo, will be heading that up. And Warren Gilman, who's involved with CEF and Queens Road Capital, has joined the board of that company as well, which is currently wholly owned by Gold Mining. So I'm definitely an entrepreneur that has a contrarian bent. I think you would have to certainly be a contrarian to have been interested in gold starting in 2012 when it entered the bear market. You would have to be certainly a contrarian to be in the uranium space. It's been an extremely difficult commodity to be in. It's probably been in one of the longest bear markets of any commodity that I know of. And but it provides for opportunities, and it provides for opportunities to acquire assets for lower valuations. And I do believe in our resource business, a lot of value can be created based on what you pay for an asset. And then at some point when the commodity price works, you can really maximize the value for the company and for shareholders. So I'm based in Vancouver. I'm a university grad of University of British Columbia, serve on that university's alumni association. Obviously, nowadays with COVID, we all spend more time based out of our respective kind of home bases. But at all companies that I've ever been involved with, I've always really focused and paid attention to the importance of having the best teams possible. So certainly at none of these companies as entrepreneur is it really just about me. It's really about a very capable, committed, and competent team that we always assemble, and that's the job of any entrepreneur, is to do that and make sure you've got the relevant skill set coupled with long-term commitment that you can bring to the table to get things going. So at UEC, as your audience may or may not be aware, the chairman of our company is the former United States Energy Secretary Spencer Abraham, and Scott Melby, who's recently been on your show as Executive VP, over 35 years of experience in the uranium mining industry and with the majors. Let me stop there in case I'm going too long than what the time for the questions.
Appreciate that, and really appreciate the extensive overview, Amir, of what you're up to. And let's talk just uranium market conditions immediately here. Amir, your thoughts on the effects of the U.S. elections coming up, the Russian suspension agreement to resolve potentially, of course, COVID, and these impacts on term contracting to potentially start in 2021. What's your thoughts?
I do believe there's growing bipartisan support for nuclear power, and it really has to do with the fact that if you care about the environment, you recognize you need nuclear power in the mix. So when you have the fact that many climate scientists and environmental groups have become supportive of nuclear power's capabilities to create emission-free electricity on a large scale and in a baseload matter, that has also really allowed the left to align with the right. I think the right side of the political spectrum sees nuclear power from a standpoint of perhaps national security. I think the left side of the political spectrum sees it from a standpoint of an important ingredient and when it comes to dealing with environmental concerns. And so I do believe there will be bipartisan support. In fact, one of the least contentious bills the president signed, President Trump signed in his last 3 years, was the Nuclear Energy Innovation and Modernization Act, which did have bipartisan support. And so to that extent, I think there should be less impact to how nuclear power is viewed and perceived, and the role it plays in the energy mix, irrespective of the election outcome later this year. With respect to the National Reserve that was proposed in the Nuclear Fuel Working Group recommendations and the report that came out in April, that realistically will be delayed and probably put on the shelf until after the election. It's difficult to think that that can gain momentum from its standpoint of funding for that program to get years 1 or 2 funded to get up and running. But having said that, I think when you look at that report, when you look at how decisive and forceful it was in its conclusions and recommendations when it comes to how intrinsically nuclear power and national security are tied together, and how unacceptable it is to be wholly dependent on foreign sources of uranium for domestic consumption and power generation. There's currently no uranium mining left in the United States, so it's 100% import. All of those key conclusions are not they're not necessarily political, they're factual. And so I think also moving forward after the election, there will also be bipartisan support for the concept of supporting a national reserve at a time where there's no uranium mining left in the U.S. And so again, you have a very comprehensive, I think, nuclear energy and uranium mining initiative that came out of the Department of Energy, which is arguably the most comprehensive initiative and government policy document since the Eisenhower administration in the 50s. And so it's quite historic. Any initiative of this historical importance and also of real meat and significance, I think will take longer to implement. And so as we head into 2021, there really is now a heck of a document from a manifesto and blueprint point of view that the US government has put out there, which I think truly speaks to long-term commitment to nuclear power, long-term commitment to uranium mining, and most importantly, the domestic mining of uranium and other nuclear fuel capabilities. I think as important as it is now to everyone that we should have domestic capabilities when it comes to making masks and gloves and ventilators, those supply chains matter, and having domestic capabilities in your backyard now matters more because of the experience we've all lived through with the pandemic and how critical those supply chains become when there's a squeeze or a pinch point. And again, I think it's completely unacceptable to anyone moving forward that we wouldn't address the supply chain issues of nuclear fuel, including uranium, as we would with just about any other essential goods that we have come to really count on.
Amir, the Russian suspension agreement, what do you think will come out of that? And with this reserve potentially being funded, do you see, if that takes still a couple of years to get underway, how will the Russian suspension agreement and this domestic programs affect potentially term contracting start?
The uranium miners and the Trump administration have argued that there's that an over-reliance on Russia for our energy supplies is not only unnecessary, but just dangerous to our national security. I think furthermore, President Trump directed Commerce to continue the limitations on Russian imports of uranium, and so ideally reduce them. This was, again, a policy that was articulated in the Nuclear Fuel Working Group recommendations. And again, the point was to revitalize the domestic uranium industry and fuel cycle. So I just reading the tea leaves and at the same time, as a member of the Uranium Producers of America, were purview to certain confidential discussions that I need to obviously walk a fine line with any comments I make. But I would just say that reading the tea leaves, the likely outcome is that there will be significantly reduced quantities of Russian uranium entering the U.S. market over what is currently allowed. And the utilities will continue to get some of the desired access to Russian enrichment that they look for. But ultimately, there's going to be a boost in demand for U.S. and Western supplies of natural uranium, and to some extent, other services along the fuel cycle. And this, I think, is somewhat of an overhang potentially in the kickoff of the next contracting cycle, as you're obviously aware. And I say that obviously because I presume you've had lots of guests on the show that talk about uranium market fundamentals, but there's a cumulative gap of over 300 million pounds by 2026, just between demand and production of uranium. And the last meaningful contracting cycle we had was pre-Fukushima, so almost a decade ago. And so obviously we had 2 years leading up to last summer where there was an overhang in the market because of the ongoing Section 232 process and the Commerce investigation into that. And now ever since that ended, you had this prolonged 7-month period until the administration finally published the findings of the Nuclear Fuel Working Group. And now the last piece in my mind that needs to get resolved by the end of this year, which it will, is the final outcome of the Russian suspension agreement, all of which means coming to the end of this year, any possible overhang that could have been government action that would have potentially impacted the mindset of a fuel buyer or a utility before the next major contracting cycle began would be potentially out of the way, including not just U.S. utilities, but international utilities, all of which would look at obviously the U.S. dynamics as a sign of where the rest of the market would fall in place before, in fact, some of their serious initiatives kick off, including China. I don't think the contracting cycle is one that needs to start and end just with U.S. utilities. It truly will be global in scale, and China will be a very important driver of that, as they have in previous cycles.
Good point on China. And Amir, let's assume for a moment, talking about UEC, that uranium is 50 a pound and utilities are executing long-term contracts. What is the UEC plan to take advantage of that? What key projects will be the focus? And will Scott be obtaining term contracts? And at what point to justify a production startup, what price would that be? And does the company plan to sell pounds into the spot market at some point?
Since 2013, when we shut our production in, and even when we were in production, UEC does have a track record of having been an unhedged producer. So in fact, in our entire history, we've never entered into any long-term contracts. We always have had a belief about remaining 100% unhedged, and that's been the case up until now. Now, when we think about the future moving forward, there are some nuances and differences. The biggest one being the United States Uranium Reserve. That it will be a process where you would have to compete in you would have to submit offers in a competitive bidding process when the program is funded. And that is something that's going to look more like a contract once you're awarded any of that business. And so presumably anything that we sell in the future into the US National Reserve would be under some predetermined parameter of price, quantities for delivery, and would look more like a contract. Beyond that, at this point, there is no predetermined strategy in terms of volumes or quantities we would want to commit to contracts. But having said that, we arguably have the most competent and well-connected sales and marketing team in the entire industry out there, led by Scott Melby, Butch Powell, both of whom have decades of selling and marketing uranium, both in the US and globally. Scott, as you know, and just to remind audience that maybe is not familiar with them, was the president of Cameco Global Sales and Marketing, and just president of Cameco Inc., and responsible for all of Cameco's portfolio of contracts, which exist even to this day, were spearheaded by Scott and put in place over a 20-year career with Cameco, and having advised and led similar initiatives for companies like Uranium One and Kazatomprom. So we certainly have the individuals that understand and have the relationships as to what it takes if we were to commit to long-term contracts and potential pricing. And certainly, I think it would be a different kettle of fish dealing with the US government and the National Reserve versus utilities. I also think we, again, have always viewed our business very much as a global business, not just being in the US sandbox, but asking ourselves both the question of how do you have projects that can compete on a global scale, not just on a US scale, and how do you position yourself so you can supply uranium not just to US utilities, but globally. That's always been our mandate, and that's one of the key reasons as to why you saw UEC remain neutral and not be an active participant in some of the trade-related initiatives and issues that took place in the last 2 years. On that note, to come back to your question about production and development, I think what's arguably lost on people from time to time is the significance of the role in-situ recovery mining has played in the supply side growth and production growth of the uranium mining industry over the last 15 years. There's a lot of conventional projects out there in the world. There's a lot of development stage conventional projects in the world. But the bulk of production growth in the last 15 years has been via in-situ recovery, the in-situ recovery method, and mainly in the country of Kazakhstan. This does support a number of key initiatives. It's quite it takes a lot of time and capital to build conventional mines. Probably the best company in the world that understands how to build conventional mines is Cameco, and you look at the over 20 years it took them to develop and bring Cigar Lake online. Conventional mines are higher cost. You look at the very good execution that companies in Namibia had in the last cycle to get into production, but obviously in lower uranium prices, conventional mining also in other parts of the world struggles, unless you're Olympic Dam and have numerous byproducts, uranium being one of them. So standalone uranium projects have a clear case study of being successful and dominating the growth in the last 15 years when it was in-situ recovery. And when you look at what the US has, the US has incredible untapped geology when it comes to sandstone-hosted uranium deposits that are in-situ recovery amenable. Our focus as a company for 15 years has been primarily on that. In the South Texas Uranium Belt, in the Powder River Basin of Wyoming, where there's both a history of in-situ recovery mining, but also, again, a lot of untapped potential due to the fact that for 15 to 20 years, most exploration development dollars went into Canada, Africa, and basically Central Asia when it came to uranium exploration mining, and none in the US. Most uranium projects in operation recently or in the last decade were brownfield projects with very little grassroots exploration done over the last decade. The only grassroots discovery in the United States over the last decade is our Burke Hollow project in South Texas, which is also now fully permitted. So our company's production strategy, just to introduce that for the interview, is really centered around Wyoming and Texas. It's centered around in-situ recovery, and it's centered around fully permitted projects. I think the other issue that we often think is overlooked in the uranium business for project development is how long it takes to permit properties for production. And it takes almost twice as long to permit a uranium mine in places like Canada and U.S. and Australia than it does a gold mine or a copper mine. And today, and over the last 15 years, we put quite a bit, most of our emphasis on acquiring low capital intensity projects, hence in-situ recovery, that have proven to be not only a great source of production growth, but also low cost production. So today, in-situ recovery projects occupy the first quartile costs for the cost curve in uranium mining. And most importantly, capital intensity. The upfront capital needed to develop an in-situ recovery mine would be less than $50 million. And most pre-feasibility stage conventional projects in the world today start at 500 million and go up to $2 billion. It's a completely different scale of capital intensity. And so from our perspective, we can develop low capital intensity projects that are in-situ recovery amenable and permit them in the United States. We're in a safe jurisdiction. We got the biggest customer for uranium demand in our own backyard. That's the 95 units that are operating in the United States, generating baseload electricity in this country, and doing it again in a way that is both environmentally friendly and low cost. So our South Texas hub and spoke strategy is really anchored at our Hobson processing plant. It's a state-of-the-art facility, has a physical capacity of 2 million pounds per year. And we have produced uranium already from our Palangana mine, which is part of the hub and spoke, the hub being Hobson. And you have a number of spokes or satellite deposits where we're going to recover uranium using the in-situ recovery method and then ship uranium-loaded resin to Hobson for processing. This method for us was executed, and we have proof of concept here. We built Palangana in 6 months for around $10 million. We operated for 4 years. Again, the proof of concept showing that over the 4 years of operation, we came in at about just under $22 per pound cash costs. We shut that production in 2014 when the uranium prices were approaching sub $40 per pound. Never predicted they would last this long, not in a sub $40 environment, but in a sub $30 environment before just recently recovering back over 30. But then we've really put our emphasis around acquiring additional projects, making discoveries. So that's alluding to Burke Hollow, and then making acquisitions in the Powder River Basin with our Reno Creek project. So Reno Creek is today the largest fully permitted pre-construction in-situ recovery project in the United States. And in South Texas, between Burke Hollow, Palangana, and our Hobson processing plant, you've got the foundation for a hub and spoke strategy. The permit at Reno Creek is a 2 million pound per year permit. The physical capacity at Hobson is 2 million pounds per year. So what we really aspire to achieve, what we look to achieve longer term as a developer transitioning to producer, is to get to the permit capacity of Reno Creek, full capacity of Hobson, and look to produce up to 4 million pounds of uranium with that framework in mind. Again, that's only a few of our projects, and we have a very large portfolio of projects. Some of the projects are fully permitted. That's Reno Creek, Burke Hollow, Palangana, Goliad, and Hobson. We have more fully permitted projects for production than any other development stage uranium company in the world. But that's only about 50% of our total resource base. The other 50% is made up of projects in Arizona, Colorado that are at a 43-101 preliminary economic assessment stage. And so there's also a really strong pipeline of future development and exploration upside on the existing more production-ready assets. And the way I would also kind of look at this is really for people to really understand the permitting. Andrew, it took 7 years to get the permits at Reno Creek. That's in a mining-friendly state like Wyoming. 7 years from when it was submitted to when it was granted. 5 years in Texas for Burke Hollow, but that's Texas. And in Texas and Wyoming, everything for uranium mining is done at the state level. So you don't go to Washington, D.C. and deal with the Nuclear Regulatory Commission for any permits. So despite the fact that it's state-only permitting that has the backdrop of being in a mining-friendly, business-friendly state, it's 5 to 7 years. And so again, like I really kind of, when talking about what I think UEC is all about and what differentiates us, it's not just pounds in the ground. It's not just the fact that we're a past producer, but it's the fact that we've really spent the post-Fukushima timeframe in acquiring and permitting projects. Pre-Fukushima, we had one project that was permitted for production, that was Palangana, with 1 million pound per year permit there. Today, we have 4 projects permitted for production and an ability to get up to about 4 million pounds per year with what is permitted with the various projects and Hobson's physical capacity. So that kind of growth is what we have focused most of our energy on during the bear market that we've had in uranium, and frankly, we're still in, but coming out of.
Following up on that, you brought up a couple things I want to ask you about. Certainly, the United States is focused, most of the projects are on ISR. Just one thing with the Goliad project, all the permitting on that project has been resolved. I remember that there was some remnants of some issues back 2011, 2013 through probably 2014 that had a little bit of issues, but I believe that's all been resolved. Is that correct?
Yeah, correct. So actually, it's interesting. I mean, we can have a whole conversation if you want about my adventures and our company's journey through permitting projects in the U.S. Again, we've permitted more projects and taken them to the very end successfully than any other company. And it's not always the same. You know, you think about South Texas, and South Texas, you feel like is maybe kind of uniform in terms of it all looks the same. It's a similar area. And county to county, it's different. And our Goliad project was situated in Goliad County. And it was the first project we were permitting as a company. And it had local opposition to the project. And that local opposition meant that we had to make sure that not only technically we satisfied the regulatory requirements that the Texas Commission on Environmental Quality, the state agency that oversaw the permitting process, wanted to see, but we had to also engage in a number of public town hall meetings. It sometimes was contentious. In some cases, you never win everyone over, and in some cases, you have supporters, don't have supporters. It's a process, and of course, it is so critical because at the end of the day, you're many things to different constituencies. What do I mean by that? I mean, yes, we're a public company, and you're thinking about, and at any point, your decisions are made as into what is in the best interest of the company and shareholders. But when you have a project and you're developing for production, you also have stakeholders, you have neighbors, you're part of a community, you have to find win-win solutions. And so we committed in a way to Goliad County by demonstrating that we were getting involved with the community, by giving out a high school scholarship year in and year out, by committing to meeting with those individuals who were concerned about uranium mining. And gosh, we even had, I think, one of the landowners who we hadn't leased land from who sued us, that we had to deal with the lawsuit because they were concerned about the impact uranium mining we had. It was a necessary experience. You can't fast track these things when you permit projects in the Western world. It's all about transparency and accountability. It took longer to permit a project like Goliad that had opposition versus a project like Brook Hollow that didn't have opposition. So you also learn and see what those issues are. But look, at the end of the day, to answer your question, yes, we did successfully permit that project and received the various permits needed for that project, and remain very, again, cognizant that you can never take permitting for granted. It is about a process that is both technical and about community relations and stakeholder relations. And again, that's why I emphasize how important permits are, because again, as an entrepreneur, as the CEO of a uranium company, I don't know how many people you've had on your show who can actually say to you that they've permitted not just 1, 2, 3, but have been through the permitting experience on 4 different projects, either directly or indirectly, and have truly kind of rolled up their sleeves and seen what it takes and what the issues are. And so that's why, to me, that's such an important issue, because I've seen how difficult it can be.
Right.
And we've been through it, and we've seen what it's like when it's very difficult, and sometimes what it's like when it can be less difficult. But either way, it's a time-consuming process.
Yeah, permitting in the U.S. is very difficult, and to go through the process takes a lot of fortitude to get through it and to see it successful for all parties involved. Well, with everything centered around initially around Hobson, Amir, again, going back to that $50 pound uranium example before, can you just speak to time frame? Are you guys potentially less than 12 months to fire up and get first cake in a can? And then finally, what is the UEC incentive price for uranium to do so?
At around the same sort of price of $45 to $50, we would look first and foremost at restarting our Palangana mine, which was already in operations, and look to restart that project. And that certainly would be within a 6 to 12 month time frame. And that's what it took us initially to, in fact, build and get into production at Palangana was within actually a 6 month time frame.
Okay.
Where we would look to develop a second satellite project would be our Burke Hollow project, where last year we commenced development drilling and pre-production drilling for the first production area at Burke Hollow. So this involves installing monitor wells around the first production area, and we've installed 72 of those monitor wells. We have more monitor wells to install still this year. It's a fairly enlarged production area because as we kept drilling, frankly, we found continuation of the mineralized trends, and so we decided to enlarge that initial zone for production. And Burke Hollow is definitely an important project for us because of just the sheer size of it. It's a 20,000 acre property, 50 miles from Hobson, and it's 50% of the project's been explored. And even that still has a lot of exploration room and potential on it, but half of the project is still unexplored. So we just see a lot of future growth for this project. And again, it's a discovery that our team made in 2012. So it's not your typical kind of U.S. brownfield project, which most companies, including ourselves, have. And that definitely adds a more exciting dimension for this project. And so the timeline here would be over a year to bring this project online as our second satellite project, but it would be very similar to how we built Palangana. So you would basically build an ion exchange facility. It would be the same depth that you would be drilling down to. Typically here we're going from surface down 200 to 400 feet from surface, both at Burke Hollow and at Palangana. So you're drilling, your turnaround time, completion, turnaround, etc., very predictable in terms of what we've achieved at Palangana and what would happen at Burke Hollow. And again, everything gets consolidated at Hobson when it comes to the processing. Well, you're asking about Texas, but just maybe if I may quickly on, from a standpoint of Reno Creek and development there, Reno Creek is in an interesting location. If you look at the map of our Powder River Basin's presentation, it's within a 20-mile radius of 3 different processing plants, namely Uranium One's processing plants and Cameco's processing plants, both of whom have quite a bit of idle capacity because, again, no one's producing anything in the U.S. right now. So there's potential, and it's a bit of a build or buy or build or toll mill analysis to do in Wyoming to see what is the path of least resistance to develop our resource there at Reno Creek, which again is fully permitted, whereby you either build your own processing plant or utilize all this idled capacity, which is so nearby, and those companies potentially could benefit from, have some economic impact for them to generate revenue that way for toll milling, and for us it could reduce our upfront capex and development timeline. So that's to be determined, and based on how the outcome works out on that front, that then determines our timing for bringing that project online. But either way, where the story is differentiated, Andrew, is this. If you say to me right now that you have a $50 uranium price and now it's a foot race to get into production, I have the ability to say that our projects are fully permitted, so all decisions we make to capture that $50 uranium price is simply a question of timeline to construct and be in production. Most projects in the world today, especially the bigger ones in Canada, if you have $50 uranium tomorrow, they're still very much in early stages of permitting. There's still many projects in the world that are not able, if $50 tomorrow, $50 uranium per pound shows up tomorrow, and everyone can get to work on that. Most projects in the world are not ready or fully permitted such that then it's a construction exercise. And that again is the big issue here. Everyone keeps talking about $50 uranium as though we're all equal and we're all going to be starting from the same point to capture $50 uranium when we get there. And that's simply not true.
That's absolutely correct. And from there, it'll be a matter of who can gain scale and who can capture those cash flows going out. But you're absolutely right. Nothing in Canada is going, with the exception of Cameco. Even Denison, your best potential there for speed will be many years out. Most folks in Africa, besides some of the restarts, will take some time, minimum of 2 years to get underway. So let's talk capital structure here, Amir. Shares outstanding, cash and debt position for us, and also major shareholders, including the holding of management.
Sure. Yeah. As of our latest filings that we have, which is for the period ending April 30th, there's 184 million shares outstanding. Cash and marketable securities that we have on the balance sheet amount to just about $20 million. So that's 7.4 million of cash and about $13 million of value in the 20% stake that we have in Uranium Royalty Corp. The company has $20 million of long-term debt that we pay 8% coupon on, and that matures in 2022. And that was primarily initiated with Sprott and CEF. That's Li Ka-shing's vehicle, and Sprott being Sprott that everyone knows, with Rick Rule as the main backer there. And so those two make up the $20 million of the credit facility that we have. As far as our major shareholders go, just looking at the latest filings as of the June 30th filing date and what appears on Bloomberg, largest shareholder number one is BlackRock, coming in at just under 7%, followed by Vanguard at about 5%. Top five shareholders include myself and Falcon Edge Capital out of New York. And when you kind of stretch out to top 10, it includes Fidelity and Sprott as well. Again, these are based on June 30th filings that we see.
Okay, and can you just expand a little bit? Is the Sprott equity holding and CEF, Li Ka-shing vehicle, and KCR fund, are they all below that 5% threshold, or where do they stand?
Below 5%.
Okay, very well. And the $20 million facility with Sprott, Amir, due in 2022, as you know, if the market doesn't get moving, do you guys see that will be extended again? Or what might be the payoff scenario if you're going to pay it off in 2022, or an extension based on market recovery?
I mean, certainly both Sprott and CEF and then the providers of that credit facility have certainly shown tremendous flexibility to work with the company already in extending that facility, as you pointed out correctly. And so I would expect again that given the fundamental view that these investors have, I mean, as you know, Warren Gilman just recently invested another $30 million into NextGen. Clearly, he hasn't lost his interest and appetite for investing in uranium. As you know, Rick Rule recently provided a facility as well to Fission. And so you have financial providers and or financial backers here that are not exactly your typical banks. They are much more geared towards understanding and believing in the long-term recovery and the upcoming bull market in uranium. They want to participate in that. And they view some of these structured investments in the form of either a convertible or a credit facility as a way to kind of get the kind of appropriate returns in a sector that has frankly been gone way beyond anyone's expectation to have any kind of recovery. To come back to your question, I fully expect that we have some very supportive and flexible backers and investors there in that credit facility. We'll deal with 2022 in advance of it, but deal with it based on where we just see the best cost of capital, Andrew. I mean, we'll look at everything at that time. We'll look at equity, we'll look at royalties, we'll look at streams, we'll look at debt, we'll look at some of that negative interest rate money that's floating out there. Not that it will ever come to uranium, or maybe at some point it will, but look, we'll look at everything. At any given point, an important part of our job as management is to assess cost of capital and determine the best way to allocate. So we'll see how it plays out. But I think certainly you can see that the supporters and backers involved here, the names we're talking about, the CEFs, Warren Gilman, Rick Rule, Sprott, These are almost become stables in the uranium industry, and they're frankly a few companies that they've backed. They're not behind every company, and certainly they've backed our company as definitely a U.S. name that stands out in a way that you don't see that same involvement with other U.S. Vehicles. So I think it's a vote of confidence as well, despite the fact that debt is something that obviously in our junior resource business is always important to ask and understand and make sure that you fully grasp what the implications of that piece of paper would be.
Yes, absolutely. And you mentioned fission. Good on Rick and Sprott for collecting that $10 million facility with a first position lien. Let's move on here. The key management members, just real quick. I know you touched on Scott Melby, former Energy Secretary, Abraham there. Just, is there any other key management members, maybe at the operational level, at the projects that you'd like to highlight?
Definitely, as a company that's gone into production, we recognize that the average age in our business is trending up in terms of the invaluable expertise that some of the individuals that have 30 plus years of experience, approaching 40 plus years of experience, and that we need to definitely invest in a new generation of individuals that can be there to drive the company forward. So we have members of our team, especially down in South Texas, that have been with the company now for 15 years. And when they joined us, they had maybe 5 years of experience. And now 15 years later, they have 20 years of experience. And those individuals definitely are so critical to longer term future development. Our head of permitting initiatives, Craig Wall, one of our head engineers down at Hobson, Craig Bordowski, John Pollack. I mean, these are names that you don't typically hear in these interviews, but if someone was ever wondering who is the next generation of uranium geologists and miners and developers, come down to Corpus Christi and I'll introduce you to the folks that have 15 to 20 years of experience who have basically cut their teeth in understanding the permitting, the development, and building and operating and making discoveries, all the things we've done down there. And of course, they're completely surrounded and supported by the senior individuals that we have in the company with incredibly invaluable experience. The senior management team, individuals like Clyde Yancey, our VP Exploration, 35 years of experience in uranium in North and South America. Andy Curris, our VP of Resource Development. Bob Underdown, our VP of Production. Again, these are guys that have been only in the uranium business, right? Not 10 years in gold, 10 years in uranium, 10 years in copper, 30 years plus in just uranium exploration and mining. And again, the collective team has worked and gelled well together as a team. Again, we were a past producer. We went into production very quickly from as I mentioned, a standing start of a business plan in 2005 to operating a uranium mine in 2010. I know you interview a lot of resource company executives. You would agree that's fast, and we were very quick to execute. That's a testament to the team that we have. And again, just being able to say that, and not just say, but to be able to have phone calls and board meetings where you have a former energy secretary on your side, having Spencer Abraham as chairman of our company and having his insights into the Department of Energy. And, he's also a long-serving member of the U.S. Senate. That's incredible experience that, frankly, you don't find that often. I think we're the only uranium company anywhere in the world that has a former U.S. Energy Secretary as chairman. And again, Scott's experience as having not only sold and marketed uranium everywhere in the world, but having seen what it's like from a development to production and growing the business, having been there at all the companies that we talked about, like Cameco and Uranium One. I just think you have a very strong team at UEC that clearly has been recognized also by our financial backers and top investors in the world. And you look at whether it's BlackRock and on the U.S. side down to Fidelity with Sprott and CEF, all the names we've discussed. I think it's a testament to the quality of the team and what the team brings to the table.
Let's move on here, Amir, and talk just about this at the market program that you guys have enlisted into. I believe it was sometime earlier this year. Can you just speak to why the financing method was decided upon, Amir? How many shares have been sold since that started? And then, of course, are you looking to raise capital in any other way before the end of the year?
So, Andrew, the at the market sort of facility has become very commonly sort of established and put in place by public companies of all size and shape, and primarily due to the fact that there's an advantage to the company and shareholders when you can pay a 2% commission with an ATM offering, which is just the same. It's just a different form of execution than doing a private placement, for example.
Right.
Where with a private placement, you're typically paying up to 7% commission to underwriters, and the underwriting and mechanical process involved with executing an equity offering under an ATM ends up costing the company 2%. So that sheer saving when it comes to execution of an equity raise is noticeable with an ATM and attractive. Hence, most companies want to make that facility available to themselves. Now, in our case, we have had an ATM in place. Gosh, I'm going off the top of my head, Andrew. I think for about a year and a half. As of our latest filings, we have not utilized the ATM at all. So that just goes to show you we just haven't used it. I think I can tell you that that partially has to do with the fact that we don't believe and have not been happy with where our share price is as an indication of our cost of capital from an equity point of view, and so have really stayed away from that. And the last equity raise that we did was in 2018. And so we've certainly felt that there have been a number of head fakes, I guess you can say, in the sector since then, where we felt that there was going to be go time, and we were investing heavily to make sure we were ready in case there was going to be a foot race to capture uranium production market share in the U.S. or other opportunities that I don't want to get back covering the last 2 years. But clearly, I think we felt that it was important to invest and be ready to capture market share. And right now, I think we're in a position where we're of the view that we need to unlock value in other ways than just investing in production readiness. I think we've done as much as we possibly can in production readiness. And so what we've done over the last 4 or 5 months, and there was an announcement we had in late March that basically indicated that we were going to substantially reduce our expenditures, including our G&A, including salaries, including just the overall budgeted money that we were going to put in the ground. By doing so, we wanted to extend the runway that the company would have with its resources in terms of cash resources, hopefully a period in time where it would be more of an acceptable cost of capital for the company to raise money or to look at alternatives of an equity raise. Again, whether it would be a royalty or streaming deal, whether it would be other mechanisms, joint ventures, and finally, possibly consolidation. I mean, one thing that I'm a big believer in, Andrew, is that currently with the uranium price where it is, the number of development stage uranium companies, some people like to say there aren't many of them. I think arguably there's too many. And I think there does need to be some form of potentially ongoing consolidation, because there's just too much G&A out there amongst the various public companies when you consider everyone is in the same position right now, which is no production, no significant revenue, and you need to make sure that you operate in a way that just gives you longer runway. So looking forward, I think that's an important dynamic to pay attention to. I was the first, I think, CEO out there, but just coming back to April, we did voluntary salary cuts. I personally took a 45% salary cut, disclosed in our proxy material that was filed recently, just leading up to our AGM in late July. So to answer your question, it's, I guess in a nutshell, so no, we haven't used the ATM, and not happy with the current share price with respect to being an attractive place to raise equity right now. You raise money when you need to raise money, and if you need to do a small raise to basically keep the company minimally active, you do so. But in terms of raising significant capital to go build and develop, I don't think it makes sense to do that. Like I said, if you do anything, it would be minimum, and you determine what is the best tool in the toolkit when that needs to happen. And I think you've seen that. Okay. You've seen that with other companies, right? Like you saw, Denison come out and do a $5 million raise. Even Fission's note with Sprott was a $10 million note, right? Like no one is raising CapEx money right now. No one's going out there saying, I feel so good about my share price, let me go raise all the money in the world and go build a mine, right? You're seeing basically, $3 to $5 to $6 to $10 million raise And again, you and I both know that is not the kind of capital you go build a mine with. Now, mind you, if it's an in-situ recovery mine, that actually covers a decent percentage of your capex. But I think we need to see a re-rating and the equity valuations higher before companies can really pursue those types of objectives.
A lot of points, and I want to touch on some of them here just in the shortly, but certainly compensation, these types of things, G&A costs in the sector, as you just mentioned and alluded to, have been quite high for very many companies for a long period of time in a bear market. And of course, I don't believe UEC was out in the market in March of this year when some other companies in the sector tried to raise capital while their share price was extremely bombed out during that couple of weeks due to COVID. Now, I want to just touch a little bit about what you said about the share price, Amir. The price is at the lower levels. Will you be looking to buy into the market? And also, if there is a future financing, will you be participating as part of supporting ownership?
I think, Andrew, when you look at sort of my involvement with UEC and Uranium Royalty, I think you can definitely see an individual and an entrepreneur who's been committing for a very long period of time, and at times have certainly committed sometimes small capital, sometimes significant capital to the businesses that I'm directly involved with. So I can't tell you obviously right now if I'll be buying next month or the month after that. But at the same time, I can tell you in the 15 years I've been involved with Uranium Energy, I've never sold a single share from my main holdings that I've acquired in the company since the very beginning. And I've been at it from the very beginning, and I think my average cost base is somewhere around where the current share price is, and I've had open market purchases as high as $5 a share pre-Fukushima, as $3.50 a share post-Fukushima. Heck, I even remember buying stock in the market at 20 cents in December 2008 when we had the 2008 financial crisis. So when you're at it over such a long period of time, it's of course putting where my mouth is and taking a very long-term approach with this. I think the only stock I've ever sold was just in the context of option exercises. But like I said, from my main holdings that I've acquired over time, I've never sold a single share. And I can tell you, as far as my track record goes in 15 years, I can also tell you that in the case of Uranium Royalty, when we completed the IPO in that company, I acquired my stake by committing to a $2 million placement in the IPO. I mean, I committed $2 million of my personal capital to that IPO, which of course, again, I'm the chairman of, and something that of course UEC has an interest in and 20% interest in. And I did that 6 months ago. And so again, you see there too, someone that's not afraid to commit significant capital. I've done it. This is all filed. You can see it. And I may very well in the future, like I've done in the past, participate and invest in UEC. Again, we have blackout periods. There's all sorts of reasons and restrictions why insiders may or may not be able to buy just as quickly as much as they want. But again, I think your longer term track record has to speak for the kind of person and entrepreneur you are, and how you approach your equity in the company and how you think about your holdings. I don't know of too many other people in the uranium industry in the last 6 months that have committed $2 million of personal capital to their own company, and I've done that, and that tells you again how committed I am and how I think about the future here. As for UEC, you touched on it, and I think it's so important. Our share price in March, April, when that crazy sell-off happened just this year, fell as low as 40 cents a share. I think it was 38 or something. You didn't see us panic and hit the button and say, let's raise money. And as you know, some companies did raise money right in that kind of March, April timeframe. And again, not only did we not raise money, but in fact, we went into cost-cutting mode. We announced cost-cutting modes, and we went into very sort of aggressive G&A cost-cutting mode. And furthermore, Andrew, we didn't set any options while the stock was below $1, or sorry, in that sort of 40, 50, 60, 70 cent time frame. I think recently when we had our end of year grants, they were set right around 95 or 96 cents, or just slightly below where the current market has now recovered to. So again, all of this, I think there's only so much I can say about what the future holds and what I may or may not do in the future. But again, I do look at the immediate past, and the longer term past the 15 years to say, look at that longer term track record to get to know management and how long they've been in something, what experiences they've had with it, what kind of ups and downs they've had, and how they operated through that. You know, in my 15 years, I've been through the financial crisis with UEC. I've been through Fukushima with UEC. I've been through the longest bear market that uranium industry has seen since Fukushima with this company. And I've just lived through the COVID-19 crisis with the company as well, right? And I think all of these crises is when you really get to see how management operates, right? How are they like in trenches, right? When there's serious warfare going on.
You know, I think commitment level with a particular company and of course management directly has to do with the amount of money they have personally invested in the company as a percentage of their total wealth. That certainly can align conviction if that information is known. And you bring up some good points, Amir, and I want to touch a little bit more on the G&A cost cutting that you guys have started into and the compensation for a moment, because as you know, uranium market has been tough since Fukushima 2011. And in that time, UEC has been one of those companies that has been able to raise capital at will and continue to support the company's G&A and the various other initiatives you guys have gone after over the last 5 years. And you guys have also spent a lot of money on promotional efforts as well. I think a lot of people can point to that. But 2019, for example, the G&A as a percentage of total operational expenses was near 67%. Now, at the company, your total compensation in 2017 was $1 million. And of course, in 2019, your total compensation was $1.7 million. That's not including other involvement with other companies. What's your comments on your total compensation? You mentioned a 45% cut to your salary. Can you just speak to what you guys are doing to really cut down some of your G&A to live out this extended bear market with the anticipation of better conditions in the future that would, of course, justify higher compensation rewards in a bull market?
Yeah, for sure, Andrew. I mean, first of all, I think let's start with just some kind of foundational pieces here. I mean, number one, for the last 15 years, I've only been the CEO of one company, and that's Uranium Energy. And that again is part of the commitment we need to pay attention to. Now, the second point I would highlight is at the end of the day, what drives shareholder value is value on a per share basis. And what's important about the cumulative actions that the outcome of all the actions we've taken and decisions we've made since Fukushima has really been about making the most out of a very difficult hand we were dealt. All uranium companies were dealt a very difficult hand with Fukushima, and it's what you do with it. And what you do with it, it is ultimately captured in shares outstanding and value per share. So when you're not producing, you don't have revenue, what is the most important value that you can maintain on a per share basis? And it's your resource in the ground, because that's what you're gonna derive value from and revenue from in the future when the uranium price does recover. So when you look at our company in April of 2011, so a month after Fukushima had happened, we had about 72 million shares outstanding and controlled approximately 12 million pounds of uranium resources in the ground in all categories. And so that works out to a ratio of about 0.17 resource per share. And when you look at our, in terms of that ultimate value per share, when you have to kind of justify everything in terms of what shareholders are ultimately going to think about, ultimately what drives shareholder value is really that value per share. And so today we have 184 million shares outstanding, but we have over 100 million pounds of uranium in the ground. That ratio today is 0.54 in terms of total resource in the ground, as it was during Fukushima or right before Fukushima. So in terms of value per share and what has been 9 brutal years in the bear market, we have actually really not only grown the resource base sufficiently to keep up pace with the dilution burn rate or equity burn that we've had to experience, and all uranium companies have had to experience, but we've kept our shares outstanding below 200 million shares, where you have a number of other companies that are out there that you know that have anywhere between 400 to 600 million shares outstanding during the same time frame. They're at the same age as UEC, still don't have fully permitted projects, and still have billions of dollars of unfunded capex. And there are even companies that have done very big, massive 50-for-1 rollbacks, which we've never done a rollback. So in terms of being stewards of our capital structure, in terms of how ultimately we have operated and navigated the bear market, it really is about, on a relative basis, everyone's been in the same boat. Every company has had to look at their businesses the same way, through the same difficult lens. And that also is the same for salary and anything that is set in terms of executive compensation. Executive compensation has many checks and balances. And the checks and balances really start with the fact that you, number one, set executive compensation at any company based on independent board members that make up the compensation committee. Those independent board members in the compensation committee work with outside compensation consultants. You then propose numbers that ultimately gets reviewed by outside proxy advisors, ISS, Glass Lewis, that vote and recommend to vote to institutional shareholders as to whether say on pay or executive comp is fair, inadequate, concern, low concern. And at your shareholder meetings, these things are voted on. And so our company, year in and year out, including this past July, we just had our AGM, and we had, not only did we receive low concern and recommendation to vote on say on pay for executives from our shareholders. So the ultimate test being that your shareholder meetings on how those things are done. But the science that goes behind the executive compensation is also one that's derived from having peer groups, primary peer groups, what's happening amongst the industry, your companies your size, companies slightly higher than you, slightly lower than you. And so it's something that, again, it's not determined, let's say, just in my case, by myself or any other CEO of a public company by him or herself. Finally, just to kind of capture the numbers that you talked about, my salary at Uranium Energy was, before the recent cuts that we had, just under $400,000. That's salary. That's cash that you get to take home, pay taxes on, and live off of. Anything else, so when you talk about $1.7 million, anything above $400,000 is either at-risk equity compensation that has to be earned over time based on vesting schedules that go out to 3 years, or performance milestones that need to be reached. If they're not, you don't earn them. If you look at my July filings, almost $200,000 of value that was linked to the $1.7 million that you just mentioned was actually forfeited. Why? Because those performance milestones were not met on July 31st. And so when people look at these compensation tables, they have to understand that when it says 1.7 million or 1 million, whatever the number is of total compensation, that is not an annual salary. That is not a take-home cash pay.
Correct.
The only column in an executive comp table for any public company that is guaranteed bird in hand is the column that says salary. So to be clear, for me, that number was under $400,000. As of April, that number for me is just under $200,000. So my salary, what I take home, what is bird in hand, is just under $200,000 right now. Any of those other numbers that, again, get you up to 1 million or 1.7 million, that's using Black-Scholes calculation for options. Options are at risk. Why? You got to stick around for 3 years to earn them, number one. And number two, sometimes they're in the money, sometimes something happens, they're not in the money. I'll give you an example. I personally had 1 million options that was granted to me 5 years ago. Their expiry date was September of 2019. You and I know what happened on July 2019 with President Trump deciding to go against the decision to enact tariffs and quotas. Uranium market stocks, most stocks, including us and U.S. uranium stocks, took a big beating. Who would have known 5 years ago when these options were granted that when the times come for them to expire, you're going to have Donald Trump in power. There's going to be a process where he's going to decide on this, thing about quotas, and those options may all of a sudden completely disappear. So last September, I forfeited 1 million options along with other executives that had the same thing because they were out of money. They were at $1.40 strike price and the stock was at 90 cents. You lose them. You don't get them back. They don't get reset. They're gone. And that's what I mean when I say that we have at-risk compensation that makes up the total compensation number that we talk about. So I think there's this complete misinformation or misunderstanding where people say, oh, well, it's 1.7 million. Again, that is derived from a number of different time vesting, performance related measures. and again, at-risk compensation. As I mentioned, I was the first CEO in the uranium industry to come out and take almost 50% cut to salary this year. I don't know if anyone else has done that. I'd be curious, the next people you interview, ask them if they've taken a 45% salary cut. And I'm also advocating for G&A consolidation in the industry because I think there's too much G&A out there. And we like to lead by example. So that's something that, again, we're advocating. And I'm not saying everyone in my company took a almost 50% cut, Andrew. Some, other staff and other individuals have taken 25, 35%, but as CEO, as the leader, you got to lead by example. You got to take the biggest hit. And Andrew, look, over a 15-year track record with this company, is every year the same where you walk away with 1.7 million of salary of 400,000 and then stock options and at-risk equity compensation that may or may not work? Absolutely not. There's been years, over 15 years, where when I started this company, I was taking nothing. There was no salary. Then then you start making 50,000. Then you make 100,000. Then the company grows. Then it's different every year. When you're an entrepreneur, when you're in a sector that is as volatile and as difficult as uranium has been, there is no guarantees. And when it gets tough, you got to be the first one to say, we're tightening the belt, and we're going to have to ride this out and make sure we deal with with the tough nature of it. I've answered that adequately, and I don't think there's anything out of line, in fact, about my own salary, the compensation at UEC, when compared to our primary peer group or secondary peer group. Certainly, our institutional investors or our shareholders collectively don't think that way, as evidenced by how executive pay and say on pay was voted on at our AGM. Right. And as evident by the fact that, again, I believe, based on public disclosure, we're the first and only uranium company since COVID who has taken voluntary salary cuts. We were not asked by shareholders to take salary cuts. We took voluntary salary cuts, and I'm not aware of any other company that does that. And I don't think $200,000 a year salary for myself right now is in any way out of line, or I know there's other companies that pay twice that for their investor relations people. So I don't know. I'll leave it at that, Andrew.
Well, certainly you bring up some good points, and well taken. To be fair, my information here is looking at historical amounts based on total compensation figures, not salary alone. And I completely understand that. And I think that there has been some pushback with some folks in the community about the stage of the company, bear market status that the company is in, and extension of runway, as you talked about earlier, to try to get to better market conditions that would, of course, merit additional compensation and additional milestones that would be reached. And to the point about compensation cuts with other companies, you're right. There's many that have not done anything. There are a few that have and reduced some of their costs. And so I just want to make sure that people understand that. And the other part is too, is when you look at the peers, and there's three peers that I look at when I look at UEC, it would appear by looking at historical information about total compensation that your salary is higher than your CEO peers. It doesn't mean you haven't done things in the bear market that would potentially merit those bonuses, et cetera. And I'm not here to argue that. And I would just say one more thing, and I appreciate your comments. Investors that are critical of management team compensation levels during bear markets, people got to understand when you buy equity of a company, you're backing management, and that's supporting their compensation levels. So if you don't agree with management compensation, but you bought the stock, yet you are unable to influence change through voting power, then you might have your head examined.
I appreciate what you're saying. Just for the record, though, and just again for everyone's just to be on the same page again, at 400,000 salary, my salary, if we're just talking about the U.S., and this is before the cut, at $400,000, my salary is exactly the same as the CEOs of the two U.S. companies that you're talking about. And so, in fact, it's not higher.
You're correct.
It's the exact same.
I was referring.
Right. Okay. But the only difference is, at this point today, at least for the time being, I've taken a almost 50% voluntary cut, whereas the other two companies you talked about haven't. So in fact, before the cut, we were exactly the same. No, the same salary as us as the other two companies. As of now, in fact, we're significantly lower. Now, having said that, I appreciate that we're kind of talking about just two other companies, but the reality is we are in a global business. I'm not competing with just those two companies in the US, because we're competing with 20 other uranium companies who are all competing in the same sandbox for investor mindshare, investor attention, and utility contract and business. And to the same extent that our company hasn't had revenue over the last 6 years, the reality is that our primary peer group of other uranium companies that are compensating their teams and their executives and their board members, none of them have revenue either. The reality is that at $30 uranium, the only way you can add value by investing your time and being committed to a uranium business is by putting assets in the company, either through acquisition or advancing them sufficiently so when the market turns, that's where the reward comes from. And I don't think anyone expects that just because the companies don't have revenue that you basically provide these services for free, because no other uranium company operates that way. And the other thing I would say is that, again, we got to go back to the ultimate measurement point, in my opinion, which is shares outstanding. I mean, we haven't had revenues for 6 years, and we practically have the same shares outstanding as one of our past producing peers in the US, and the other producer in the US who is the same age as us, who practically has the same shares outstanding, but has done a 50-for-1 rollback. So my point is, again, go back to a very fair and I think straightforward way when I'm not saying you, I mean anyone looking at these companies, and measure any company based on the ultimate measurement, because all my actions, everything about G&A, everything about any company does will ultimately be captured in its capital structure, because that is the scorecard, and that is right. The number that then the value on a per share basis is what any investor should care about, because whether I make $200,000 a year or $400,000 a year won't make a single difference down the road as to whether UEC trades at $1 a share or $5 a share. But if we have a tight capital structure and keep adding more value on a per share basis, which we've done, going from having 1 fully permitted project to 4 fully permitted projects, going from 35 million pounds of uranium in the ground to 100 million pounds of uranium in the ground. And I know you want to talk about it, so maybe I'll give you a segue. And we've added a project like Alto Paraná. We've added our 20% stake in uranium royalty. We didn't have these components in our portfolio 9 years ago. And so, you talk about a group that's basically said, look, we have a difficult uranium market. We're not going to sit around. We'll go out there and make the most of the bear market for our shareholders. And that's what we've done at UEC.
And the assets that have been added over the years, I would say certainly have added value. Now, some of them might be questionable, and I'm not here to argue with you on that, but you have added net value. There's no doubt about that. And my comments about the compensation with peers was, again, historical total compensation. I understand the salary part of that is certainly in line with what I've looked at. And again, if you want to do comparisons, Amir, looking at your Canadian peers, if you'd like to associate your 7-year lead time Canadian peers on their projects, it's pretty evident that some of those peers up in Canada are getting paid even more than yourself, right, which is a little bit laughable. And certainly if we want to start comparing even further than that, we can look at a company like Cameco and Gitzel's pay, which again is questionable as well. But let's leave that for another discussion.
Fair enough.
The other part to it, I do want to walk into that. I want to discuss the titanium project with you.
Sure.
So you guys have had, some of the filings have suggested probably over the last 18 months or so, Amir, and maybe you can correct me on that, but what I'm seeing is the Alto Paraná titanium project in Paraguay has some type of concession dispute. And so can you just maybe update the audience as to the status and what will be the resolve?
So let's step back for a second, a bit of background here, because clearly, for someone new to this, or if you're not new to this, UEC's bread and butter, our focus clearly, as we've talked about for a long period of time here, is our in-situ recovery business in Texas and Wyoming. During the bear market, we've looked at various ways through corporate development where we can pick up value and acquire opportunities where we felt the price was right because we're at the bottom of the cycle. And we looked at how we can leverage our technical expertise to get into projects and areas where there was sandstone hosted opportunities for uranium, i.e. in-situ recovery amenable projects, but also diversify our permitting risk to some extent. So when we decided to enter the country of Paraguay, we had just been through this very long and contentious permitting process that we talked about earlier in the interview at Goliad. And so we actually felt longer term maybe there was going to be easier jurisdictions to permit it. Maybe it'd be good to have some permitting diversification in our portfolio. And so we looked at Paraguay because in the 80s, Anschutz had done significant work there. In fact, Chuck Melby, the president of Anschutz at the time, who Scott Melby's father, was the person who spearheaded that for Phil Anschutz and created a number of joint ventures in that country with Korea Electric Power and Thai Power. And then it was all forgotten about until kind of 2006-07 when the uranium market got going again. And a couple of juniors got into that area, and Cameco became a joint venture partner, and they invested in a number of discoveries or deposits were delineated. And fast forward, Fukushima happens, and that's around the time we started to take an interest down there. And so in a nutshell, with this background, we ended up making 3 acquisitions in Paraguay. And so when you think about the 3 projects we have in Paraguay, they cover close to 1 million acres. Okay, 1 million acres of ground that we cover between the 3 projects. Each project is comprised of various blocks that are under concession contracts. And so over 8 years that we've been in Paraguay, first of all, we've never had any concessions seized. Okay, we've had great in-country presence. We have a country manager. We've got a small team down there, great relationships. But just as it happens in the U.S. and in any other mining jurisdiction, there are annual regulatory filings, there's assessment work, there's reviews that get conducted by the local mining regulators as part of your property interest and maintenance of it. Again, you're talking about 1 million acres. So what you're referring to in our disclosure has to do with the fact that in our ordinary course of business in Paraguay, again, in the ordinary course of business in Paraguay, and in a couple of cases, we wanted to add an abundance of caution where there were disagreements with the regulator over our annual filings over 1 million acres. We took certain action to just make sure we were protecting ourselves out of, again, abundance of caution. But as it pertains to Alto Pirana project, especially block A of many blocks that make up the 1 million acres, where earlier this year we conducted and announced a drilling program where we drilled this area, and this is the area where the pilot plant, we have a pilot plant on this Alto Pirana project is situated on. There are no problems. The area, there's nothing with that block, for example. So when you talk about any disclosure that we have in our filings, for example, again, it's got nothing to do with where this core asset is situated. And again, when you have 1 million acres and many different blocks that make up that 1 million acres, the maintenance of that is part of our work, and part of our job is to make sure we again, do things cautiously and conservatively in terms of the annual filings and necessary assessment that needs to be done. And that's what's there. So ultimately, now, if we just talk about what is, I love this because, you and I talked about this, how I think there was a question or someone had said, has the Alto Pirana project been seized? No, it hasn't been seized. I mean, is there anything in our filings that says this asset was seized? And if it was seized, how can you do a drilling program at Alto Pirana, which we announced earlier this year in May? So and let's talk about Alto Pirana for a second. It's not a uranium project. Alto Pirana is one of the world's highest grade, largest ferrotitanium deposits. It has a 43101 resource of just under 5 billion tons of 7.4% TiO2. It's mineralization that occurs right at surface. Goes down, on average 6 meters, but can go down to 10, 15 meters as well. The late David Lowell. David Lowell is a very famous American geologist who has, I think, close to 20 or 30, I forget, discoveries to his credit. He spent over 10 years working on.
He's a good man.
Passed away a couple of months ago. This was his last significant venture that he was directly involved with as CEO. And they spent approximately $25 million in the project. They caused the country of Paraguay to update its mining law due to the importance of this deposit. That's how we became aware of it when we showed up in Paraguay looking to acquire uranium projects. And look, we acquired Alto Pirana for less than $3 million in stock in 2015. Okay, so let's not lose sight of what we paid for the asset as well. Okay, it was a very well-timed acquisition. We didn't bet the farm on this asset, and we've done very good work to de-risk it, do some drilling, demonstrate and be able to convert a portion of the inferred resource to measured and indicated that can then support a preliminary economic assessment. But of course, with the reduced spending plans that we have right now, and with the fact that we're a uranium company first and foremost, and this was a secondary asset that we opportunistically picked up for less than $3 million all in. I mean, the initial, I think our all-in cost to acquire was actually $1.5 million. When I say less than 3, I'm talking about anything we may have spent ever on our maintenance of this project, including the $700,000 we spent on drilling recently. This has been a very low-cost way that truly demonstrates how we've added value at this company. We've been entrepreneurial. We've thought outside the box. When we saw a great deal that had some synergies with a location and a country we were already established in, we took advantage of it. Today, this is a situation where, again, as the market recovers a bit, Andrew, and we feel that we can allocate capital to complete the PEA or preliminary economic assessment at Alto Paraná, we will do that. Most likely it'll be in 2021. As I mentioned, right now, because we're reducing spending and we're generally making sure our cash lasts longer, we don't believe it's priority to go complete a PEA and look to advance this project when it's not our core focus. But it's there, we own it 100%, has not been seized. It shouldn't be lost on the listeners that UEC does have a significant position in Paraguay with 1 million acres of land that we control, with 2 distinct uranium projects and a titanium asset. And we've been in that country for 8 years. So I like to think we know our way around how to navigate that. But just as you would in the U.S., you would have sometimes disagreements with the EPA or with other mining regulators in Canada, whatever the case might be, it's also no different in that country.
Understood. And just to confirm, though, the key assets there, Amir, do not have any problems attached to them, correct?
Again, yes. The key, if we're talking about problems, and we're talking about, again, disagreements we might have with the regulator and the annual process that's involved, their review of the minimum requirements or work we need to do to maintain these blocks. Again, just starting with Alto Paraná first and foremost, that's the key and most valuable project down there. Absolutely none of the issues that in fact you refer to in the filings have anything to do with Alto Paraná. And in fact, since our latest filings, Andrew, we continue to resolve some of our disagreements with the mining regulator down there and feel extremely confident that all of this at the end of the day will be resolved. And again, you're talking about a few blocks that out of many blocks that make up our overall 1 million acre position down there.
Okay, appreciate you confirming that. And again, if the audience wants to dig further into that, fully welcome you to grab whatever resources you need in country to go to the office there and look up whatever you want to look up. You can do it in the US, you can do it down there, you can do it in Peru. Help yourself. Amir, I want to come back just for a moment. What I forgot to ask you, can you just talk about your guys' initial anticipated production rate coming out of your Texas assets, because that'll be the core focus out of the gate here. And can you just speak to the expected capital expenditures to get those first initial project out of the gate?
Yeah, the initial rate between Palangana and Brook Hollow would be to get to up to about 1 million pounds, which is half of that capacity that we have at Hobson. And the total capital requirement we would estimate for that, again, it's an estimate at this point, would be in the ballpark of about 15 million. Now, it was about 10 million to build Palangana. That's based on actual results, but Brook Hollow is a larger project and it's a larger initial production area. So there's more drilling with the monitor well and the well field drilling. But again, that's the initial number. Longer term, you want to get up to 2 million pounds of production and the full capacity of the plant. But the initial target rate would be about 1 million pounds with both Palangana and Brook Hollow, both of which are fully permitted.
Okay, and Goliad would be target number 3, correct?
Goliad is really further down the pipeline for us. We just see a lot more size and scale and possibilities at Brook Hollow and Palangana, but Goliad is fully permitted and it's there as another potential satellite project for the company.
As you know, you've got a couple sound competitors in the U.S. uranium business. You know, you've got Energy Fuels out there, you've got UR Energy, you've got Peninsula Energy up there in Wyoming. Why is UEC in a better position than these companies? And how should investors approach their U.S. uranium equity selection and portfolio?
Well, really 3 comments on that question, Andrew. Okay, comment number 1, I pay full respect. And I think any investor looking at the sector today and companies that are left standing and doing more than standing at showing that they have an ability to actually mine uranium and process it after a brutal long bear market that any commodity has seen, you got to take them seriously. I mean, at this point in the game, with so little combined market cap between all these companies, I think we're splitting hair maybe when we start kind of beating on each other over who's better and who's not and this and that. So that really, I think, is comment number one. Comment number two is to partially, again, sorry, this is not a disagreement. I'm not trying to disagree with you, but I really don't think of us as just a US uranium company, and that you should just look at us in the context of the US and just two other companies in the US. I compete on a daily basis with global uranium companies when it comes to investor mindset, investor mind share, capital, and utility interest. By no means am I getting any love, nor are the other two companies in the US, Andrew, from US utilities. US utilities as customers are very global, so should we be. And that's how our business has been built from the very get-go. From the very get-go, our thinking at UEC was, how do you build a business that could be globally competitive? And so when you go, and it's how this interview started on this premise, right? My view is that the most competitive way to mine uranium globally, as evidenced by this remarkable production growth in Kazakhstan, is the in-situ recovery method. So another one of the US companies that you're alluding to, as you well know, is more focused on conventional mining. I don't think conventional mining in the US can compete with conventional mining in Canada and Africa. I do believe in-situ recovery can compete very well on a global basis. And now we're talking about different price points. When I say compete, I'm talking about in a $50 uranium world. In a $50 uranium world, can conventional mining in the US compete with conventional mining, let's say in Canada? I don't even think I'm the only one that would say no. I think if you ask the executives of another company in the US that has conventional mining as a main focus, they would tell you at $65, not 50. So at $50 uranium, which is the first stop for this bus for the uranium price to get to.
Yes.
You know, what is competitive globally in that price point? And we are of the view that it's in-situ recovery, and that in fact, even in-situ recovery projects in the US can be competitive at that price bracket. Now, you start talking about the 65 to 75 price bracket, it's a different story. And conventional mining in the US can be very competitive there. And that's why we have two preliminary economic assessments that have been completed at our Slick Rock project, at our Anderson project in Colorado and Arizona, respectively, that show a couple of robust projects at $60, $65 uranium. But coming back to where the puck is going to go, where we expect the first stop is going to be for the uranium price, it's the $50 bracket. We want to make hay in that $50 bracket. We want to grab market share in that bracket. And so when it comes to that, we have more fully permitted in-situ recovery projects than any other US company. We have the biggest pre-construction and fully permitted in-situ recovery project in the United States. That's Reno Creek. We have more diversification in our portfolio with in-situ recovery. It's not just one or two projects. It's 4 projects that are fully permitted. And we've remained unhedged, and we have really maintained sort of a neutral standing when it comes to our relationship with the US utilities and also potential US customers, as you know, due to the fact that we were not aggressively pursuing and advocating for trade remedies such as tariffs and quotas. So UEC, in a way, is sort of like the Switzerland of US uranium mining, is quite neutral in the US, but it has a global view of things. That we are in a global business. We need to be globally competitive. We compete on a daily basis with companies around the world, and that our strategy to have fully permitted in-situ recovery projects can be competitive within the $50 bracket, where the uranium prices are going to go to first before a new wave of projects come online. And that's where I believe US will shine, and US in-situ recovery projects can have a competitive advantage.
Duly noted, Amir, and certainly the global view, absolutely. And ISR, it's a little bit laughable, so forgive me, but ISR in the U.S., when you look at that in total global volumes at the $50 bracket, that won't even make a dent in the problem that is coming and the amount of ISR projects that could potentially continue to supplement that. So a very good point on the ISR in the US. And just one other part there, help the audience out a little bit. For the folks looking at the US domestic, how should they approach looking at these companies? Should they buy them all? What should they do when we're looking at these production ready companies?
They should probably subscribe to your newsletter and get, I don't know, get, you know, you can obviously do your own due diligence. There are a number of analysts that cover the US uranium companies and some of the Canadian ones as well. So you can get independent third-party research. There are folks like yourself who do a consistent, regular job of covering the sector through interviews and commentary that I'm sure you have as well. Obviously, all that we can do as company representatives is come on shows like this and make our case. Our corporate websites are full of information. We're public companies, every single detail from G&A to compensation to geologic resource to everything is obviously available. So you can spend as much time as you want or as little time as you want to do your own due diligence and ask around and read some research reports and get a sense of you know, who all the players are. But I mean, suffice to say that the investable universe of uranium companies today, of those that are publicly listed, is probably around 10 billion. In 2007, at the peak of the last bull market in uranium, it was 120 billion. And so the sector is extremely small. I mean, the combined market cap of all publicly listed uranium companies is probably like what Tesla trades in a few hours of daily trading volume. I mean, it's just small. And so there, and again, any company that's left standing today, irrespective of the fact that on interviews like this, we're asked to explain why we're different than others. And sometimes it sounds like you're taking a jab at others. You really aren't. I think you got to respect and believe that any company that's left standing has some viable long-term competitive advantage that should be realized in a better uranium market. And we shouldn't forget that it's just been a really brutal bear market. And again, kudos to any management team and board and group and shareholders, frankly, too, who have just kind of stuck with the narrative and the thesis and hopefully will be rewarded very, very handsomely for this long-term approach to investing and a sector that is truly like the definition of contrarian investing. Look that up in dictionary. It should be the the uranium sector that shows up as the definition for that.
One word, just uranium. Well, Amir, just following on to that, as we ask all of our guests, why should potential investors be considering UEC at current price levels? What would you say to potential investors who are listening?
I mean, first of all, I think you have to ask yourself if you what kind of value and what kind of opportunity you like. I mean, in a world today, so let's start on a relative basis. Why consider UEC? I think, first of all, on a relative basis, relative to a world where the stock market is back at a new all-time high, every sector is absolutely flying on multiples that is a premium to net asset value, premiums to anything imaginable. One of the only sectors in the world that I know of that I think I'd like to be challenged on that is still trading at a massive discount to NAV, a discount to replacement value, a discount to where it has been over the last decade is the uranium business. And that context, I think the UEC story, again, as we've touched on, is differentiated by just simply the production readiness we have, as demonstrated with the number of fully permitted projects that we do have, the ability to produce uranium using in-situ recovery in politically safe jurisdictions like Texas and Wyoming, the fact that we have proof of concept as a past producer, management team that's aligned with shareholders. As I mentioned to you earlier, myself, I'm a top 5 shareholder of the company right next to BlackRock and Fidelity and Sprott. No other uranium company has a former United States Energy Secretary as chairman. So again, it's another validation and confirmation of the quality that we have. The backing of people like Warren Gilman and the backing that links back to Hong Kong with Li Ka-shing, the And all of that, again, has only been extended to 2 companies in the uranium sector, ourselves and NextGen. And so, again, we've attracted investors that are quite exclusive and go through a long diligence process before obviously deploying capital. And we've been around for 15 years. I mean, this is not an overnight fly-by-night company. We've been around long enough where there's a long track record and a track record that shows we were able to aggressively grow our business, over 100 million pounds of uranium, more permitted capacity for production in the U.S. than any other company for in-situ recovery, and in-situ recovery in both being low cost and, again, scale. Again, I think this is the misunderstanding. People think in-situ recovery projects are small. Again, they're not. That's how Kazakhstan has become 42% global producer. That's all in-situ recovery. And the problem in the US is we've done very little exploration for uranium in sandstone settings. All projects except for Burke Hollow are brownfield. Watch the future of uranium resources when people actually commit capital to exploration. Andrew, don't forget, 6-7 years ago, NextGen's Arrow deposit didn't exist. Fission's Arrow Triple R project didn't exist. These projects were discovered through exploration drilling. Modern exploration hasn't been applied to the most prospective regions of the United States in 15 years, and a lot has changed in 15 years of exploration. There just has not been an incentive to do grassroots exploration in the US. And when you look at the grade of uranium in the US for sandstone-hosted deposits, it's no different than in Kazakhstan, except we don't carry a lot of resources on our books because we haven't had the financial incentive or market environment to do a prolonged period of exploration drilling to discover new pounds. That's how the business works. And we just haven't done that in the US. I don't say we as UEC, but the whole sector. We've done that to the extent we could at Burke Hollow. And we made a nice discovery, and it's only going to get bigger. But with the difficult uranium prices and with sandstone deposits being low grade, they don't really capture the market imagination like projects in Canada do. And so as a result, you don't attract as much exploration capital. And we don't have some of the tax advantages they have in Canada with flow-through financings where you get a kickback on tax if you spend money in the ground doing drilling. We don't have that in the US. So there's been no financial incentive to drill for uranium, to make new discoveries. But whether you listen to the US Geological Survey that says some of the biggest untapped potential for in-situ recovery deposits is places like South Texas. US Geological Survey has pegged the number at 200 million pounds of undiscovered uranium that they see as potential down there. Those are big numbers. And that's not the kind of numbers anyone carries on their books on in-situ recovery projects right now, but that's because we're also not drilling for it. So I believe long-term really belongs to grassroots exploration, ability to look for uranium, find more sandstone-hosted, low-cost ISR projects. I believe UEC can lead the way in that, and we've demonstrated that, both in producing uranium using low-cost ISR and discovering new projects like Burke Hollow and aggressively consolidating, right? Doing M&A. We've done more M&A than any of our peers and believe there should be more M&A and consolidation in the sector because, frankly, there's too much G&A and costs right now in a sector that still has recovery ahead of it.
Well, certainly higher prices will provide the opportunity for companies to do that. As you said, ISR in the States right now is very negligible, but when the capital dollar goes in, when the prices are good and everybody's in a bull market, there certainly will be some advancements made. There's no doubt about that. Well, Amir, let's wrap up here. How can folks reach out to you and also to the company for more information?
www.uraniumenergy.com, www.uraniumroyalty.com. Our ticker symbol is UEC on the New York Stock Exchange. You can look me up on Twitter at Amir Adnani. If you're interested in what I'm doing in the gold sector, take a look at www.goldmining.com. And I would say that's probably covers all the bases.
Really appreciate you coming on, taking the time, talking through the issues, dealing with some tough subjects, and best luck to Uranium Energy Corp as you guys get underway in the upcoming cycle.
Andrew, I really appreciate it. And hopefully we'll come back and do some follow-ups whenever you're available and there's more new developments to talk about. But it was a great first introduction. We had a lot to cover and you had a lot of questions, but I enjoyed it and I look forward to reconnecting with you in the near future.